Yes. Hey guys, Gerald Peters. Let's talk about the part-time millionaire. So you got my book. You don't have to die broke. That's where these videos are at. This is you probably got my free ebook or maybe ordered a hard copy. It's only $20. The purpose of the book is we begin, and I think my last email to you I said, "Have you read the book yet?" Listen, get off your ass. Stop what you're doing and read the book. Like, holy fuck. You really have nothing more important than your family's financial future, than your personal financial future. If you're not 100% certain and you're on a path and you're fucking committed to it and you really don't have a blueprint, you will die broke. Most people in America statistically die with no money. They're not leaving shit to their heirs. They are literally living maybe a decent lifestyle until the economy, till COVID, till business goes out, till they get outsourced, till they get sick, and then it's all over. The party game's all over, and then it's a life of struggle. And the Science of Getting Rich, which I also give away, and I have a little e-course on this too. I don't know that I would do both at the same time. It's a little bit of overload of me. Will kind of help you get the mindset on this. This is a journey. This is a path. The reason that 7% of the Americans own all the assets of the other 93% isn't necessarily intelligence. There's a lot of dumb rich people. There's a lot of smart rich people. Isn't because they were born in a certain area. There's people from the ghetto that are rich. There's people from, trailer park. I was born and raised in a trailer park. It's not. That's what the Science of Getting Rich teaches us, that it's none of that. It's that people do things in a certain way, and if you do things in a certain way, on purpose, on point, on mission, you will end up with like results. The universe is so ordered that like action produces like results. The good thing for you is then all you have to do is to take that blueprint, mold it, shape it to your life, your circumstances, because you can only work with what you have, with where you are, with what you can do. Okay? What I'm doing can be a bridge, can be inspiration, can give you ideas, but you may end up ultimately doing it differently, meaning you use different vehicles to get your money. You may invest in different vehicles, but the point is you have to get money and you have to invest it and you have to do it on point, on purpose, with a fucking plan. And it takes 10 years, 15 years, 20 years, meaning you have to start now, because the further what you're doing now in 10 years will make a huge difference. Why? Because that will become compounding on top of what you're doing then. So this is a 20-year plan. Getting to be a millionaire is a 20-year plan that you have to start today, and you have to be impatient with today. Like, you have to be impatient with yourself right now. That's what we're going to talk about, this idea of the part-time millionaire, that your part-time job, one of your part-time missions is becoming a millionaire. Like, you have to study this. This is where you're trying to get to, and that's just that you're just now like getting there to where now you can really do something. But this is the goal. You have to get your wealth, your net worth, your money, the money you have invested needs to get to this. And in order to get to this, it's going to require working on this and this, right? It's going to take courage. You'll hear me talk about that. It takes courage. What's our time? 3 minutes? Why would I say it takes courage? Because you're going to have to be a person who buys assets that produce cash flow, that compound. We talk about this, the Millionaire Code. What is the Millionaire Code? What is it? Amount, right? Times yield. This is the return. So typically in the S&P 500, you're going to get like 9 to 10%. Maybe you push it and you're doing like technology and a lot of growth plays like I do. You might get more. Bitcoin, right? BTC has compounded at 200% a year for a decade. Will it keep doing it? I don't know. What if it only does half? What if it just does 100%? What do you think about that? What about houses? So these are the different ways, but it is amount, sorry, I didn't finish, times yield, right? Times time. Meaning we all have an allotted amount of time. It's what you do with this time, right? And then the asset you choose, well, you may invest in something different than I do. Maybe you just don't like stocks. You just can't do the dividend stock thing. You don't like the dropping. So cool, you just put it all in real estate. And you're like, yeah, but you know, houses are too expensive in my area. Cool. Well, you go to the internet and you get in a syndication. Like, stop making fucking excuses. If that's your plan, go do that. And even if you don't do it good, or it's not the best, or it didn't return the most, who gives a fuck? It's a return, and you're doing it. You're in the game, because not everything's gonna go perfect. Okay, but this idea about the part-time millionaire is about being about it every day, and so that's what the book opens with, is the well. And I call this the money flow. I call a lot of things the money flow, but this is super important. This is the cloak. This is the umbrella. This is the coverage. This is what your life fits into, and this is how you make your money. So this is income right here. This is the well. This is where we lower the bucket down in the book, first chapter, and we grab water. Well, water is symbolic for your income. This is the money you have coming in. All the money you have coming in. So, I mean, stimulus, that's money coming in, right? And we've got to take that money, and you got a couple places to put it. Necessities, these are buckets. This bucket has a hole in it. Savings, which is different from investing. We'll talk about that. In the book, we talk about what savings can be. Savings can be money, right? Cash, physical cash. I'm an advocate of having physical cash. I mean, that's getting older school. Older school, is that even a word? You know, as we go more and more digital. I would put Bitcoin on here. I've had gold on here in the past. That keeps going down. Land, it's paid for, but that's going to be slow to sell, but you could borrow against it. I mean, and the other one is real estate. A lot of people don't think about this. Your savings could be in real estate. What if your house is paid for? That's like having a savings of, you know, say $250,000. It's appreciating at 5% a year. Does it cost you to live there? Yeah, but you got to live fucking somewhere. So why not live in something you own? I mean, to me, that's right. So these are the things: cash, Bitcoin, gold, land, real estate, that could make up your savings. So you want to build your savings larger and larger. This is the blowout fund. This is insurance, so that you handle your investments correctly. Because if you don't have any savings and you don't have the budget correctly, you're never going to be able to safely invest and allow time, the three components, right? Amount, right? Yield, what? Time. So whether it's trailer parks in here, or, well, car wash would be more like a business. And that's up here, and we'll get to that. But we got to get this structure right, because as you get this structure right, and up in here is you, right? We might could put a P over here, and then you're working on what? Personal development. You're going to the gym, right? You're working on here's the side, the business is over here, right? The side idea, you should be selling something. Everyone should be selling something. You got to find something to sell or to flip or to have. Something that you know more than other people. Go get it, do something with it, fix it, paint it, turn it, sell it, rent it. Something that you're doing outside of your job. Maybe it's selling a service that you have, or babysitting or dog walking. For me, I did simple shit like mowed yards. And what that did is that gave me money, cash. And once you have money that you don't need, because you have the buckets, right? Over here, we're talking about debts, right? But some of these necessities, the reason it's called necessities, how are we on time? Is some of these you have to have. Insurance, right? So insurance, electric, right? So everyone has those bills. Like it costs money for everyone to live. It's when we get up into the atmosphere, right? With cars, houses, trips. I mean, if you're financing anything other than stocks, real estate, business, you know, things that return money, yeah, I mean, you're just doing it backwards, dude. I can yell at you, I can say all kinds of things, but that's going the wrong way. At that point, you're literally financing going backwards. You now have reverse leverage is what it is. When you owe more than you have and you're below the zero line, you literally have reverse leverage working against you instead of working for you. This is why it's so important to remove that debt, because if I remove the debt, then they have the cash flow going the opposite direction. Instead of being a person that's paying interest, you become a person who collects interest, because you invest in like business development companies, you invest in REITs, you invest in syndications, you invest in real estate, you invest in dividend stocks. So you take your human energy, that energy that you went with your time, your talent, and you went into the marketplace and you made it, and you bring it home and you take some of that. And that's the cash that you don't need, right? Funnels to first the savings. So first thing we got to get to do is a layer between you and the world. Some people call this an emergency fund. That's fine. You just need to establish it. Ultimately, what this will look like is paying off your home. And we'll get to that later. Right now, you just need money. And this is like break the glass money. This isn't help Harvey money, okay? Or help your sister out. Your sister's fucked. Your money ain't coming out of here. That's a sacred contract you make with you and yourself because you decided, like the book says, you don't want to die fucking broke. And so that's going to require you to make decisions, and that's one of the decisions. So we began eliminating the debt. Your first investment is into yourself, which means to set you free, you need to buy yourself back. And the way you do that is you start eliminating debts. We may have to throw some over here because it's just smart to have some, but if you're 22 years old, you don't need much there, right? What you need to do is get rid of the debts. You got plenty of time for investing. What you don't want is reverse leverage. So you have to swap debt for reverse leverage. It's literally working against you. It's sucking money from you and your family and pushing it into the arms of people who are investors like myself and the other 7% of the people who own the planet because they own the assets that produce the cash flow. You're paying the cash flow. When you go in and borrow, you're providing the cash flow for the investors. You want to be the investor. And then once you're the investor and you have a bunch of money, you could then borrow and let your investments pay it back. It ain't you paying it back. You have to move yourself from a position where you stop paying for your stuff. Other people, other vehicles, other assets, other things pay for it, okay? And so in order to think like that, you have to take part of your energy and push it off into these, and we haven't even gotten into it, and we get into that in the book. If you don't have it, hit my link. This is super important. If you don't get this, you'll never be a good real estate investor, you'll never be a good house flipper, you're not gonna be a good entrepreneur, you're not gonna be a good investor, you're always gonna be struggling in life, you're never gonna get ahead, you're never gonna be prosperous if you don't get this right, in the right order. And if you do it, you're gonna multiply your chances of acceleration. You're gonna put the leverage on the positive side instead of on the negative side.